We get this question quite a bit here,
Yeah.
but usually it's in regard to a broad market crash, nothing specific to our holdings. But what do you got?
So it's the answer I'm going to give is pretty much the same answer I always give. Firstly, I think it was Peter Lynch, the famed investor, who said that there's been more money lost in trying to predict the crash than in the crash itself, and that's typically true. The other thing I want to point out is that the way that I invest is looking at the long term, 5-year plus time horizon, and judging where I need to be positioned for that time horizon. What happens in the interim, in the short term, is of far lesser consequence to me. Where we have or don't have some crash, I don't have the ability to predict that, and I know there's tons of people predicting it now, and they've got, I don't know, some percentage chance of being right. It's like a broken clock is right, twice a day sort of thing. And certainly a lot of the pundits out there have been calling for market crashes for ages and ages, and then of course it happens at some point, and then they go, see, I told you, and you're like, yeah, but you just lost your shirt for the last 15 years while
Right.
So the way, and look, in part, it's funny because George and I were talking about this in Dubai. There's the book called Market Wizards, which I'd highly recommend everybody read. I think there's 3 books.
Should be
trilogy
required
of that.
reading.
Anyway,
right.
What's blindingly obvious when you read that book is that the principal reason for the success of those investors comes down to risk management. And because each and every one of them has a different strategy. You've got long-term guys, short-term guys, you've got guys doing funky derivatives, you've got guys doing everything, completely different sectors of the market, completely different trading strategies, you name it. But they're all successful, and they all 100% of the time utilize incredible risk management. So I would suggest, and I always have suggested, that you should pay more attention to portfolio management, position sizing, and risk management than to trying to predict whether the market's going to crash, whether the market's going to go up,